don't know if we had parallel processing or not in there, but it's clearly that this got smoked.
Volumes, were they rational or irrational? We really wanted to figure it out, and we couldn't. Spent a couple of years struggling with those questions. I won't tell you where they came from. But in the meantime, my investment in Columbia paid off. So part of the company was sold. I had a few bucks. My father had more, but we had some money. And my Colombian friends, God knows why, said, okay, we have this money. We want you to invest it for us. Now, where they got the idea that I would be any better at investing for them than that broker at Merrill Lynch years ago, I don't know. But I said, fine, I'll do that. And I had a friend who had been a mathematician and was now a commodity trader. And he seemed to be doing pretty well. So I said, Charlie, we have this money. Would you manage it for us? And he said, yeah, of course. I'll be happy to. He said, why not? It was more than he'd ever seen. So he thought it was good. And so I made a deal with Charlie. He was going to get 25% of the profits. No fixed fee, but 25% of the profits. And I said, but if we lose much money, and I said, if we lose 25%, you have to stop. We don't want to lose all the money. So that's a stop loss, okay? But as I was walking out of his apartment, something occurred to me. And I said, oh, also, if you make too much, we're going to have to stop. And he said, well, how much is too much? It's a reasonable question. I said, 10 times what we invested after your rapacious fee. Well, how could he say no? I mean, 10 times as much. So he said, fine. So that was the other stopping rule. We stopped on that basis after 10 months. He had multiplied the money by a factor, I guess, of 13, and when you take off 20. Anyway, we actually made 10 times our money. It was incredible. It was just completely lucky. I know it was completely lucky. But there it was. So now I really, had some money, and I had followed his work. I had followed his work carefully. In fact, I had to, because he never quite knew where he was. So I said, okay, I'll keep the books. Every week, I'll tell you where you stand. He said, okay, that's great. It'll take my mind off that. So I did that. And so I learned a little bit about that, and it was soybeans in my youth. And I thought, okay, mathematics is driving me crazy. I had recently gotten divorced. I was on the wrong side of the first wife. I was involved with another woman who turned out to be my second wife and my present wife. And I was frustrated with work, so I thought, I'm going to go into business and be a trader. And I did. I did do that. And I started doing some trading, and that was working okay. I got some investors. I brought in a guy from IDA. He was the best cryptanalyst in the world. He was a wonderful model maker and so on. In fact, I don't know if any of you have ever heard of the Baum-Welch algorithm or the EM algorithm. Anyway, it's a famous algorithm in statistics. He was the Baum-Welch. So he was a very smart guy. And I said, I'm looking at these commodity charts. Actually, it was currencies that we were trading, and they seem to have some shape to them. They don't look random to me. So maybe we could make some models. He said, okay. But it turned out, and we did. We made a model, and it looked like it was going to be okay, and to trade. But we were doing fundamental trading, and he hated the model building. He said, he loved the fundamental trading. He loved reading the newspapers and reading the tickers and the news tickers and getting ideas. And it turned out he was, for a while, very, very good. So we put the models aside for a while, and we traded, and we did very well. We did very well. But it was a gut-wrenching experience. It's, one day you walk in and you think you're a genius. Oh, my positions are in my way. Look, and the next day you walk in and they're against you and you feel you're a dope. How could I have done what I did and so on? There was no rhyme or reason. It was just, you put your finger in the air and you try to sense which way the wind is blowing. I'll tell you one story to illustrate the craziness. So it was a time when gold was going up. Gold had been you couldn't buy or sell gold, and finally you could, and the price was rising, and it was rising. And we had a deal where Lenny Baum and I, where we'd each have our own account. I was the boss, but we each had our own account. And in our own account, in fact, we both bought gold. We're supposed to be independent. We both liked gold. The gold was going up. It started at $200 and $300 and $400, $500. It got to $500, which by today's standards would be like $1,500 or $1,800. And I said, this is a very high price. I'm getting out. And I sold my half. But Lenny, I think you should. No, you don't know how high this is going to go. You can't. This is going to go very, very high. I said, okay. So he stayed. It was $600. It was $700. It was $800. It got to $800. That day, I happened to be talking to a friend of mine on the phone who was a stockbroker. And in fact, he was my stockbroker. And I said, how are things, Dick? And he said, oh, well, they're fine. This morning, my wife, Lucy, came into my closet and cleaned out all of my old tie clasps and cufflinks and went downtown to sell them. They were gold. They were gold, see? I said, well, are you having a hard time in your family? Why is she? So your wife said, oh, he says, she's a jeweler. I said, yes, I know that. So he said, so she only has to stand in the short line. I said, what do you mean, the short line? He says, don't you know that people are lining up and standing for hours selling their gold? I said, no, I didn't know that. Thank you very much. We had a phone in those days. If you picked it up, it was a different phone. If you picked it up, you went right to the floor of the commodity exchange. And I got Lenny in the office, and I put the phone up to his ear, and I said, Lenny, sell the gold. In fact, and he said, no. I said, Lenny, I'm the boss. Sell the blankety blank gold. I was more emphatic than that. He said, all right. Oh, he sold the gold. Maybe it was $810. Oh, and he was mad. And the next day, we came in, and it opened at $830. And he said, I told you. By the end of that day, it had dropped 25%. It was down to $600 all in one day, and it never, of course, went back up. So that is an example of common sense and very good luck. Good luck. If I hadn't called my stockbroker the day I did, Lenny would have held on to that gold. It went back to 200 after a while. We would have ridden it all the way down, I think. And so it was just plain luck that I had. But it was at least common sense that I thought if everyone in the world is trying to sell their gold, how long can it be going up? There is such a thing as supply and demand. So there it was. So that was what it was like to be a fundamental trader. It was stomach wrenching. So Jim Axe, I got Jim Axe, who was a very well-known algebraist, to come